not complain. All right, so good evening to everyone. Good morning, depending on the time of the day that you are accessing this recording. We're just going to do a quick, my discussions will be mainly with the people who are live. Blessing is with me, yeah? But we're just going to do a quick, we're just going to brush over Learning Unit 3 and Learning Unit 4. Let me be very, very clear that we are not going to cover, we are not going to lecture, and we are not going to go in details. You have a wealth of tutorials and lectures that are waiting for you. And my biggest concern for all of you is that if you are letting those recording pile up, I don't think it's going to benefit you, because now you're going to be in a situation where you are rushing and you have to go through these recording. There is stress, certain things you do not understand. So obviously remember that the lectures and tutorial recordings are there to give you actually a very good idea about the entire chapter. The rest will just be for you to go through the notes and also to practice, because that's the main thing. One part of it is the lectures and tutorials and the notes that I've provided you. That's just one part of it. The second part of it is your actual practice. When you are practicing, and if you are not practicing, it doesn't matter how many notes are provided to you, how many tutorials, videos, they're not going to be of any benefits to you. So make it a habit to jump in quickly into the lecture and the tutorial so that you can have a broad view of the entire chapter, what it's all about, and the main point and all that. And the second part is you can jump straight into practicing. When you feel like certain things are difficult for you to understand, that's when you go deeper into your reading now. If you're struggling with a particular example or exercise, refer back to the concept, your notes on that, right? So I hope that this is clear for all of you. Refer back to the theory. Sometimes you are not able to do well because you do not understand properly the theory. And you are more than welcome. You know all our channels. Reach out, whether it's be on WhatsApp, post your questions, say, I don't understand this concept, and we will tackle it together. Right, so I trust that this is very clear. So we're going to have a bit of fun with Blessing and anybody else who's going to join us tonight. So I'm just going to look, for example, at question 3.2. Blessing, you are here, and we can interact. Have you covered Learning Unit 3 somehow?
I have not all of it. I've been trying to do bits and pieces in between my assignments and work. But I think maybe if we could go over what you think is the most challenging or most important, just so that we don't have to go over everything, but I will take the time to go through it thoroughly as well.
No, for sure, because unfortunately, in a short session like this, we won't be able to go much into details, and that's why, since it's a tutorial, I'm
Yeah.
more looking, for example, at questions. This
Yes.
question is in your textbooks, and all of you who are listening to the recording, you have question 3.2. One of the things I've done here is I've provided you some of the things that you need to pay attention. You need to look at. You need to watch out for certain things, right? So you have this is the total sales. They give you the total sales and they give you the total purchases, right? Figures for this company. So it's a company, and as you can see, they start by the total sales, the total purchases, right? And then they give you also the budgeted sales and
Yes.
purchases figures. And it's always interesting to note that when you're looking at the budgeted sales, you could see that the figures start from May, which is
Yes.
different from the total sales as it is. It's starting from January, February, March,
Yes.
April. So we can clearly see that the actual sales from January to February, March, April are there. But then they
Yes.
did a forecast, or yeah, we can call it a budget, but sometimes they, if you look at our theory in learning unit 1 and learning unit 2, we were talking about the focus where they would look at
Yes.
3 previous months and then they focus for the rest. So I think
Yes.
that that's what's happening here clearly, but they say it's a budgeted, fine, we're not going to argue with them. They are
Mm.
saying from May, June, July, and August they provide for the 4 next months. These are the budgeted figures for the 4 next months. Very important. And when you're looking at the notes, straight away they tell you that 75% of all sales are on credit.
Mm-hmm.
So which is you need to understand that a portion is cash because they're paying straight cash. 75% is on credit. What on credit means by now, I think all of you know, is that we are selling it, but we are going to receive money later on. That's the best way I can put quickly, right? We are selling it now, but we're not receiving all the cash right now. We're going to receive the cash later on. And this has to do also sometimes with the trade agreement that we have with the particular daters, because these are our daters. Remember, they are taking merchandise or inventory from us. They are buying from us, but on credit. They will pay us back later. And this is how they're going to pay us back in this example. The cash is collected from debtors as follows. As follows, because 40% of the outstanding amount is going to be collected. What is that 40%? It is the 40% of the 75%. Always don't go and take the entire amount from January. You take 40% of it because they clearly told you that only 75% of those sales is on credit. So for January, for example, you can see that the credit sales itself, you're going to take the 440,000 and you find the 75% of it. Blessing, I hope you have your calculator, right?
Yes.
Yeah, so you're going to do this exercise sometimes quickly. So we take 440 times 0.75. This is what you do, guys. I didn't put the thousand because you understand, it's K. 440K or 440,000. Okay, a quick way to find it, you just say 440 multiplied by 0.75. Don't forget that this is in thousands. Okay, if you are someone who's forgetful, then do the full amount. You take 440,000, you write it as the full amount, and you multiply by 0.75. What is 0.75? It is 75%. There we go. And when you look here at the solution, they tell you 330,000. So when you're trying to think, how did they get it? Remember, read the question properly. And all of you, I'm sure, nobody, I will get no nonsense from anyone. You know, when you're looking at 75%, 75%, 75 divided by 100%, percentage, right? If you have to put it in fraction, is not 0.75. I don't want in your paper or you getting again a problem with this. This should not, at this level, you should not have this problem. You should understand how to do quick calculations like this. And plus you have other material that was provided to you on basic calculations, basic math. All right. Okay. So now we move on. All right. So we understand we're going to be the 40% that will be paid out after 60 days. So after a month, so let's say we are in January, we're going to skip January. 60 days is going to cover the month of January. We skip the month of January. We go to the month of February, right? That's the first month, right? And that will be that 60 days, right? That will cover that period, 1 month, 2 months, right? But we're not taking into consideration the month, the January itself. Why? Because the cash was received in January. January, forget about it. If they tell you 30 days later, you have to deal with leave January, move on to February, right? Because January is dedicated to the cash. January month is the month where you receive the cash. So you don't take that one into account. So let's look at here. When now you're looking at the credit sales, January, February, March, April, May. May, what is May? May, that's the budgeted, right? As you can see, you're gonna take 75% budgeted of May, you're going to put it here in May. 75%. What is the 75%? Credit sales, right? We remember June, you're going to take 75% of this amount. 720, if you multiply it by 0.75, right? You're going to find exactly 540, right? So that's how you populate the credit sales. So these credit sales will help you to find how you're going to collect the money from your debtors, because you told them, I want you to pay me 40% of the outstanding amount. Which outstanding amount? This amount, this credit sales, not the full sales, because the sales is divided into two. Again, one more time, remember the sales is divided into two. There is the cash part, there is the credit part. What we are looking at here is the credit part, how you collect the money from the credit. So the 40% of outstanding amount are collected during they tell you, the second month following the month during which the sales took place, i.e. after 60 days. So after 60 days, you're supposed to collect 40%. All right? When you're looking here, very interestingly, when you're looking at the budgeted, because we need to collect that money from the budgeted, but we're starting from May to August. If you look here, you're starting from May, budget receipt, May, because all that we had actual will end in April, only in April. The rest from May, June, July, August, this is budgeted. So that's how you start your table. The headers of your table will be May, June, July, August. If they ask you for something else, they say take March, then you put March. But it's assumed here when you're looking at the budgeted part, it's starting from May. So you put May, budgeted receipt for May, for June, for July, for August, and then you can even add September, no problem. Let's see how far they went here. September and October, right? So if we look at, for example, April, Do you see this April here? And you see June. So April, we will skip May because they say the second month. April, we skip May. After May, June. So that year, exactly here, I'm going to put the shape for you here. You can see April. In June, we're going to collect 40%. Is this clear? Blessing.
Okay, I'm a bit lost.
Yeah.
I understood it from Jan, that we don't count Jan, we count from Feb. But I'm a little bit confused why we also skip April. Is it because now from May it's the budgeted, so we skip?
No.
Okay.
See, here we basically, you have your credit sales, right? Your credit
Yes.
sales are your 75%. You remember
Yes.
that part?
Yes.
Okay. So now you have the credit sales from January, from February, from May,
Mm.
March, April, May, June, July. All the
Yes.
credit sales you have, right?
Yes.
So what is being asked of you here is the money for April,
Mm.
the 40%. When are you going to collect that money?
The second
Because
month.
remember, you have datas, right? The
Yeah.
second month from April, right? We agree.
Yes. Yes. Yes.
The same is from January. If you are in January,
Okay.
when are you going to collect that 40%? You're going to
In
collect
March.
January, you skip February, in
Yeah.
March, you are correct.
Yeah.
If March was part of this table, you would put
Yeah.
it.
Yeah.
But March is not part of this table. Look at the headers of this table. It's
Oh, it's from
starting
May.
from May.
Yeah.
So that's the reason why we didn't put the first payment that we supposed to receive, or the
Okay.
first receipts of money that we're supposed to receive, because it falls in March.
Yes.
After March, we have 35% that has to be collected, not in March, but in April.
Mm.
Now, remember, for January, our table starts from May. So
Yes.
April is not there. And that's the
Yes.
reason why they didn't put April. What are they going to put? They're going to put the last one here, the 22%, which are collected in after
After.
3 months. So when you
Yes.
see 120, obviously is 3 months, that will fall exactly in May.
Is it not 4 months? 120 days. 30,
No,
60, 90, 120. Yeah. Isn't a month 30 days?
Oh,
One month?
yeah. No,
Yeah.
yes, it is. But it
Yeah.
is the third month from,
Okay.
sorry, it's the third
Okay.
month. My bad.
Okay.
I apologize for that. It's the
Okay.
third month. So we have January. So then we're gonna skip January, we skip February, we skip March, and we skip
April,
April. We fall into
May.
May.
Yes.
Yeah, that makes sense, right?
Yes. Yeah.
And the 3% they tell you, the last 3%, the last remaining 3% is irrecoverable, meaning
Mm-hmm.
that don't care about, don't worry about it.
Mm.
But let's try to see, are we wrong? Let's look at January. What is the actual credit sales for January? We know it is
330,000.
330.
Mm-hmm.
Okay, so let's see that. 330,000 multiplied by
0.
22%,
Okay. Oh, percentage.
0.22, right? So we
Mm-hmm.
agree. No, you are right,
Mm-hmm.
0.22.
Yeah.
It's 72, right? 72,
Yes.
600. Exactly. That's the amount that is here in May.
Mm-hmm.
So that makes sense, huh?
Yes.
So So just we make sure here so as not to confuse anybody. So the second month, that will be for 60 days,
Yeah.
right? That's second month.
Yeah.
I hope everybody sees this. I'm correcting, and it will also be corrected on your actual OneNote once you sync it. Okay, so that's second month. And then the 90 days would be for the third month. Yeah. And the 120, that will be fourth month. All right?
Yes.
Yeah. So that's quite important to do here. The last one, I'm going to insert a shape here. Okay, just making sure I have the correct one for fourth month after.
Yeah.
There we go. So we clear up all confusions, but basically this is what you're going to have, whether in your exam, it's going to be similar questions. So always remember, what is your credit sales? And the credit sales means there is a portion that you're going to receive cash that you
And a
set
portion of
aside because you have already received that cash, and that cash will always be in the month where you've made the deal. So there is a
Yes.
portion of it, like in this case, 25%. So 75, 100% minus 75%. So it means that 25% you received it straight away, cash. The
Yes.
75%, that is your credit sales. So now, depending on the agreement, so you read carefully the paper to see, depending on the agreement, how are they going to repay? And if it is purchase, so if it is a sales, it means that I am selling a product. I have debtors who are buying on credit. So I'm gonna wait for them to pay me back in future. But if it is a purchase, meaning it's me who's buying on credit, I am purchasing on credit. They
Yes.
can also give me how I need to repay that. So always look at the question, read carefully the question. Because if you look at point 3, they say 40% of all purchases are on credit. Very interesting. And you can see the purchases are here, the total purchase and all that.
Yes.
So not only there is people buying from me, but I'm also buying from people. So I
Yes.
hope, guys, you really pay attention. And that's where the practice is important. Because sometimes don't confuse purchases with sales. That will not be a good thing. So remember this company, Pulule, it's buying, it's also selling on credit. So always pay careful attention. So I will let the class, work on this one and do what I would do if I were you is I take the question, I resolve the question, and then I check the solution. And the solution sometimes is just next to it. I don't be in the habit of being lazy and looking straight at the solutions. The arrows, the colors, and all and the circles and the rectangles is just basically for you to trace everything. That's the reason why I've put this. For example, from May to August, you are talking about the budget, right? The budgeted total sales. Here we're not dealing about the total purchases, right? But your question will deal with the total purchases from point 3 of your note. So from point 3, so point 1 and 2 deals with the total sales. Point 3, I think even to point 5 deals with the total purchase. Remember again, the business is buying on credit, that's purchase, is also selling on credit, that's sales. Sales credit and purchase credit, two different things. One is going out, one is coming in, right? So, Blessing, what do you think about this? Is it something you can jump on and try on your own?
Yeah, I think I do understand it. It's almost similar to one of the questions we had in the first time task, because
That's
one of
right.
the
That's
questions
right.
did say that a certain percentage of the goods
Yes.
were bought, or rather was
On
sold
credit.
on credit.
On
Yes.
credit.
Yeah.
Yes. So, guys, I want every one of you to be very comfortable with this. Buying on, and again, who else should be more comfortable than new entrepreneurs? You have to be comfortable, and those sometimes must click straight in your. What we try to do with the practice, we try to make that part of your way of thinking so that
Mm,
it's straight. You can even do these calculations mentally, and that's the reason for practice. You will not pass this module if you're not practicing, because of
mm,
the fact that it doesn't make sense that we're going to graduate you and you are unable to understand purchase and sales.
yeah.
These things must click straight away, right? All right. So, okay, here we come, for example, at something interesting. I won't spend too much time, but you have a trial balance, right? You know that from your accounting, very interesting. But this is also something for you to practice, because debit and credit, some of you always do struggle with debit, credit. Wait a minute. Do we have another guest here? Is Jessie here? Is Jessie in the
Yes, yes,
house, but
yeah.
she's not saying anything? Jessie, come on, unmute yourself and make your presence known.
Hi everyone.
Uh,
Hi, Jane.
hello, Jessie. So welcome.
I'm
But yeah,
fine.
so you didn't miss much. You didn't miss much. But we've gone already over one question, and I'm touching now on this. This is one of those typical questions that I would want you to practice. Why is it debit? Why is it credit? Especially you, Jess. So,
Yes.
but again, I give you even, I add this. Sometimes you might wonder, why is he adding these things? Okay, they won't make much sense to you if you are not actually in the mood of practicing, right?
Mm,
So as I put a minus, I put a plus on purpose. Why did I do that?
because,
Because I
but
want, yeah,
okay,
go
sorry.
ahead.
No,
No, go
no.
ahead.
Uh, debit means money going out, and credit means money coming in.
Thank you. Right, as simple as that. And what I would want, for example, is for you to just practice on your own.
Mm,
Capital. Why is it credit? Because it's money coming in.
mm,
When I'm drawing money, obviously money is going out.
mm,
Makes sense. Loans. When I'm receiving loans, obviously I take a loan. Yes, I'm taking on debt, but remember, everything is an asset, right? It's part of your asset.
mm,
Because remember again, your liabilities plus your equity equal your asset.
mm-hmm.
So, but for you to understand debit and credit, you just need to remember, is it money that is coming in or is it money that is going out? If I'm taking a loan, yes, I'm taking on debt, but it is money that is coming to me. I will need to repay it later on. But now, it's money that is coming in. So start practicing this in your brain. Again, I say this, you guys are entrepreneurs. Nobody should have this in your blood like more than you. You have to be, this has to build your instinct. You must know these things. All right. So you take a loan, it's money that is coming in. That's why we put it on the credit side. When we have money that is in the bank, it is a plus, right? output VAT, trading inventory. Look at the trading inventory. I'm trading. I need to bring inventory in. Obviously, the inventory comes in, but money must go out from my pocket. So I hope these things are quite clear to you. So practice them. And again, that's what I say. Once you practice and you are like, no, 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 but I don't agree with this, that's a very good thing to do. If you are not understanding something or you're not agreeing with something, post it on our chat, let's debate it. And that's how it builds you. That's how it builds your knowledge. Because you can say, but I don't agree that trade payable, it is a credit. Remember trade payable, what does it talk to? Trade payable, it's a trade that I will pay later on.
Yeah.
You are dealing with who? That's the reason why I put here your creditors, right? It's trade payable. You will repay it. But it means that this is something that for now, you receive a favorable trade, right? It's a plus. You're receiving a credit. We just talked about the purchase, right? Purchasing on credit and selling on credit. The trade payable, it is the purchase on credit. So we
Credit.
are purchasing, we are getting a plus, but later on we will need to repay it. Trade receivables, remember again, accounting, you are dealing with who? Your debtors, because you are selling to them on credit. Again, like I said, practice these because they will not come if you don't practice them. Sales. Let's move on quickly. Sales. We agree, all of us, that this money is coming in, right? We are selling, the product is going out, and they are giving us money. We agree, right? Oh, it's putting
Yes.
in quiet.
Yes.
Yeah. So we agree, right? Cost of sales. Cost of sales. Your purchases, by the way, are here. Let me show you. This is coming again from your statements, right? Remember your statement. I don't know if there's a phone out there that is making noise. But just remember to put it on silent.
Sorry.
We're all right.
Sorry.
So remember again your trade payable, what you're purchasing on credit will be part of your cost of sales. And your trade receivables will be part of your sales. This is how you linking your balance sheet, your statement of financial position to what? It's quiet in here. I'm so worried about my student this semester. I don't know why. Please, you have to prove me wrong.
So, sir, you're saying, are you asking what we link the balance sheet to, or?
No, at the moment when I'm just doing this, you can see I've linked this to. What is
Yes.
this? Where do you find sales, cost of sales, and all that? Where do you find it?
We did it in the first time task.
Your income statement, right?
Yes.
Guys,
Yes.
practice. This must be natural to you. Remember your income statement. And I always tell you, even if I wake you up at night and I tell you, can you describe for me the income statement? You always need to start by sales or revenues minus cost of sales. Then you get your gross profit minus your operating expenses, then minus your plus your operating income. You see what I'm saying? You know that thing where you're just minusing. It's a series of you are adding some income, you're minusing the expenses. That is your income statement. Remember, breathe this thing. So, at your statement of financial position or your balance sheet, what do you find on your balance sheet?
Well,
Jesse, Blessing, please save me. Save my
um,
life.
I'm
I'm
afraid
about
of
to
being
die.
wrong. I don't like getting things wrong.
No, 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 no. Remember, it's a conversation here.
I
Remember,
would say, I would say,
statement of financial position. It's a
yes,
position, one point,
yes,
one picture, right? That's
yes,
where you find your assets, your liabilities, and your equity.
equity,
That
yeah,
should be that should be by heart, right? So
yeah,
again, I remind you guys again, please, even when you're going through this recording, I am extremely worried about not only your TLT2, but your final exam. Because yes, you have to devote enough time to other modules. But remember, this in itself is a very dangerous module if you're not going to spend enough time.
mm,
There is just no way in the world you're going to pass. So we need to be in agreement about this. So guys, again, practice. Let these be natural to you, right? And this is how we even linking your accounting that you did. Because you
yes,
remember in your accounting, you are looking at your balance sheet, you're looking at your asset, liability, and
mm-hmm,
equity and all that. This is finance links everything, right? Together.
mm,
Investment, accounting, financing, everything is linked together in finance so that you can have a full view of all
yes,
financial matters. And that's what, when you're going to graduate, you are fully fluent in your financial management. You are able to carry your business successfully. You understand how to do trade, how to start your business venture. So guys, again, I'm not sounding the alarm, but I'm just saying, please, 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 I have a bad feeling that you guys have not been practicing, have not been heeding my warnings. And all these, for example, look at these. These are what? Your expenses, right? Telephones,
mm-hmm,
wages, salaries, rent, expenses, right? Rates,
mm,
taxes, insurance, all these. Remember, it's money that is going out, right? And
mm-hmm.
that's why we put it on the debit
But
side. Yeah. That's why you have, by the way, debit orders, right? Because somehow you
correct.
have to repay things. Okay. So the cost of money, guys, you know about this. What I just want to help you see here, the last thing for learning unit 3, before we go to your learning unit 4, remember to practice this. Very important, right? The quoted nominal rate. You go to the bank, they quote you a rate, especially as an entrepreneur. Are you
Mm-hmm,
excited already when they quote your rate? No. You always need to look at, but what is the effective rate?
mm-hmm,
Because you are quoting me a rate, but how is that rate compounded? Is it compounded monthly? Is it compounded semi-annually? So that's why the M here represents the period. So you must see what is the period. So now,
mm,
depending on if you are taking on a debt, you need to pay close attention. If other people are taking debts from you, you are lending people money, you also need to pay attention. That's the reason why we are touching this, because it's relevant to you as an entrepreneur. Because as an entrepreneur, you'll be in situations where you are either borrowing money or you are lending money.
mm,
So when you're giving out a rate, there could be a rate. If the people that you are giving the rate to do not understand, it's going to be so favorable to you. And also always remember, when you're approaching a financial institution for a loan, you don't just go to one particular financial institution. Obviously, you shop around.
mm.
And that's where, when you're going to get these questions, it's always going to be you went to bank 1, bank 2, bank 3, right? When you're going for your bonds, you shop around to see why. Why do you shop around? Is to find out who's going to offer you
Interest rates. lowest interest rate.
Exactly. So you, when you are borrowing, your goal, your aim, if I can put it that way, is to borrow at a lesser cost.
Yes.
But when you are lending, it becomes different. You
Mm-hmm.
want to lend at the highest possible rate because you the higher the rate, the more money
The
you're
more
going to be
money.
getting, right? So
Yes.
understand that. That's the purpose of this exercise. It's not just to waste your time, complicate you with your calculator. It is also we are dealing with a practical thing because you, as an entrepreneur, remember you're going to be in this business of evaluating.